This indicator either helps you make money or blows your deposit. It all depends on how you use it. Now I'll show you the correct setup. Hi, my name is Ellen Trader. I've been in the market for a long time and I trade systematically, without guessing or magic buttons. In this video, I'll break down how to use the stochastic oscillator, together with technical analysis, where this strategy really works, where it breaks down, and I'll show real trades in practice. I remind you that I have my own Telegram channel. The link is pinned. Join it. There's a lot of interesting strategies, different techniques I use, plenty of trading related information, and I'm always open to questions. I always help and explain things in detail, so don't forget to subscribe. What is the stochastic oscillator in simple terms? I'll explain it as simply as possible. It's an indicator that shows where the price is relative to its range over a certain period. It's not just about price going up or down. It answers the question, is the price closer to the top of the range or the bottom? And how fast did it get there? Essentially, it's an indicator of momentum and market overheating. Here's it on my chart. What does it consist of? There are two lines. A fast line that moves more sharply, and a slower, smooth line that confirms it. When one line crosses the other, it's considered a signal. But here's the important point. A crossover by itself is not a strategy, it's just a hint that something is changing. There are also the 20 and 80 levels. Stochastic is usually plotted from 0 to 100. Below 20 is considered oversold, above 80 is overbought. But the biggest mistake beginners make is buying just because the indicator is below 20 or selling just because it's above 80. The market can stay overbought for a long time and keep rising, and the same goes for oversold condition. That's why we always use it together with technical analysis to see the bigger picture. Remember, overbought does not equal a reversal, and oversold does not equal a reversal either. It only means the price has reached the edge of its range and the move may be overheated. A reversal must be confirmed by context, and context comes from technical analysis. Which stochastic signals actually matter? There are four meaningful ones. Stochastic was below 20 and then exists upward, a possible bullish reversal. Stochastic was above 80 and exists downwards, a possible bearish reversal. These signals are stronger than simply being inside the zone. Crossovers also matter. An upward crossover may signal growth, a downward crossover may signal a decline. But these are secondary signals and often noisy, so you can't rely on them alone. There's also divergence. Price makes a new low, but stochastic does not. That's bullish divergence. Price makes a new high, but stochastic does not. That's a bearish divergence. This means price is still moving, but the strength behind the move is weakened. Sometimes the market reverses without stochastic even reaching deep overbought or oversold zones. This often happens in trend. That's why we always start with technical analysis, mark levels, analyze candle behavior, and only then look at what the indicator shows, never the other way. This order is critical. Why can't stochastic be traded without technical analysis? This is the most important point. If you trade stochastic blindly, you will catch a lot of losing trades, especially in trending markets. This indicator is a confirmation tool, not an entry button. That's why you need a combination: technical analysis, idea, indicator confirmation. Where does this strategy work best? It works best around support and resistance levels, in range after an impulse, when price pulls back to a level where the crowd is making decisions. Range boundaries, places where there is real market logic, not random noise. Step-by-step strategy, how I enter trades. Let's work with this pair. First, I mark the levels. We are on a minute time frame. Marking support and resistance is mandatory. It's the foundation. Once levels are marked, I watch how price behaves around them. Here, price reached the level, a long bearish candle formed, then a smaller confirmation candle, and then price hit the level and reversed. We see a slowing momentum and stabilization for a potential buy. I look at the stochastic. There's a crossover near the 20 level, the lines are close and near the level. I can wait for a small pullback and enter a buy or trade with the trend. The indicator suggests a possible entry. So I wait for a slight pullback and enter a buy. That's it. Now we observe how the chart develops. You must understand that you shouldn't rely only on the indicator. I'll repeat this again. Many beginners think an indicator is basically a money button. They don't mark levels, don't do technical analysis, don't look at multiply time frames, choose pairs randomly and expect the indicator to do everything for them. An indicator won't do nothing for you. It's just an auxiliary tool. I am faced it. What are the main mistakes when trading with this indicator? The mistakes that cause people to lose money. Trading every signal, ignoring trend and context, which comes from technical analysis, not waiting for confirmation, entering directly inside zone. Oh, we closed in profit. Great. Overloading risk because the signal feels strong, and trading emotionally. I'll never get tired of repeating this. Emotions are not your friend in trading. They're your enemy. You must suppress emotions and approach analysis with a cool head. I'll move to a second currency pair and open another order today. I'm checking it. I don't like the variability here. I look at the price pulsation. I don't like this pair. There's strong instability. Small candles followed by large ones in the opposite direction. The market could reverse anywhere. Unreliable conditions. We don't even look at the indicator here. Based on candle behavior alone, we decide the pair isn't suitable. Choose another one. For example, here I look at the 1 minute history. I already understand a lot from it. Price almost reached the level. There's a small pullback now. It might reach the level. We can wait for a pullback. Stochastic reached 80. We can wait for a slight rise and then open a sell. No rush. The market isn't going anywhere. I'll wait a bit more, but I'll enter here because the drop was very sharp. Price may return upwards, that's fine. Remember, trades can be losing. We are not robots. The market is alive. Losses happen, nothing wrong. We observe the situation and later we can carefully recover losses using martingale carefully and responsibly. Price reached the level and even slightly overheated beyond it. We entered. Now a bearish candle is forming. I think during the remaining time, price will pull back downward. The indicator also supports this. It's above 80. There's no crossover yet, but everything points toward it. you see a small breakout downward. I think it will move in our direction. But no, it's coming back. That's okay. A losing trade is also experience. Now I'll increase the position using martingale and set 300. I'm waiting. Now we have a line crossover. Two very large candles formed. I'll wait for a small downward pulse and open a sell. It's starting to move down. I think we can enter from here and see how it develops. I'm fairly sure a reversal is coming. This candle is unstable with long wicks, a sign of uncertainty. The third candle is forming and everything points to a reversal. The indicator confirms it and marker cyclicality supports it as well. We saw a similar pattern earlier. Price moved up, then dropped, moved up again and dropped. The market is cyclical, the chart itself shows a lot. The indicator is just an additional tool, always used together with technical analysis. This indicator is often also combined with moving average and other tools. I'll talk about that more in future videos. Now we see a strong bearish candle, exactly what we talked about, and we close in profit. Great. I'll keep working with this pair and slightly increase the order size. Price has already broken below 80. I won't enter a sell now. I'll wait for the candle to grow and then enter a buy, because I don't think price will fall much further. A strong drop is unlikely now. The market will likely pulse. A candle may form that reaches the size of the previous bullish one, and we might play a buy from here. We don't rush, we wait. We don't rely solely on the indicator. You see the level is below 80, the distance between the lines is growing and buy is possible, but I'll wait until the candle develops more. I'm not fully confident yet. Pulsation also tells us a lot, especially on second-based time frames. But look how price is fighting here, pulsing back and forth. You see, it pulses and snaps back immediately. Many traders get lost here and start opening very short trades. I don't recommend this to beginners at all. Stick to 1-minute trades for now. It's a perfectly workable model, or even longer. On this video I use 1-minute trades, that's my standard. Understand this clearly, even the best strategy won't protect you from risk. One trade should never break your balance. If you risk too much, you will lose even with a good strategy. But here we are in profit, as you can see. Great. Today we had 3 winning trades and 1 losing trade. In my view, we earned well 628. So, what are the main conclusions? Stochastic is not magic. It's an indicator that shows where price is within its range and how overheated the move is. It works only when you use it correctly. The idea comes from technical analysis, confirmation comes from stochastic, and the entry is controlled by risk. If you want more strategies and real chart breakdowns, write stochastic in the comments and I'll make a follow-up video with examples combined with other indicators. We will return to this indicator many times. If you are genuinely interested in learning how to use it, let me know and I'll record a dedicated video. I remind you that My Telegram channel has many strategies, access to copying my signals, different techniques, lots of trading theory and practice. All of that is in my Telegram channel, the link is pinned. Join, there's a lot of useful information. Now I'll withdraw my profit. I enter my wallet details and withdraw the 628 we earned today. I click continue. All funds are sent. They will arrive in 20-30 minutes. I'm always glad to see you in my videos. Remember, we learn in order to earn consistently in the long term. Wishing everyone good trading. Bye!